Hey everybody, this is Jim at SP500chart.com. It's a little bit after 5 o'clock on January 10th, 2013. Before we get into it, I need to remind you, as always, that the website and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research. And you need to make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I am just a guy who draws lines on charts. Okay, we're starting out today looking at a 3-day chart because I think we need to take a look at the broad context of what's going on. But before we do that, I wonder if I could ask for a show of hands. Actually, that's not going to do me any good. But there's a show, I forget what channel it's on, it's called Mystery Diagnosis. And the show is about people who have some malady, some disorder, and they go to a doctor, and the doctor almost always the doctor will tell them, well, what you have is, and then they'll go blah, 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 give them a diagnosis, which almost always ends up being not what they actually have. So why would I mention that now? Well, I mention it now because sometimes the markets kind of act, at least treat me like that show, where it looks like one thing is going to happen, and then you see something else happen, and I have to be careful because, look, when I say I'm just a guy who draws lines on charts, really that's the spot-on fact. That's the truth. And there are times when I get a little perplexed in what's going on in the markets. And today, again, threw me just a little bit for a loop. Yesterday threw me for a loop. Today threw me for a loop. So rather than tell you that I know what we have is blah, 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 and then tell you that the markets have it wrong, as some analysts have done. I mean, I've actually watched videos of people saying, I'm right, it's the markets that are wrong. Well, look, the markets are always right. I mean, that goes without saying. So what I'm doing right now is I'm saying, if instead of me pretending to be an expert and saying this is what's going on now, I'm telling you, this is looking pretty funky. So yeah, it's looking funky. If you came to me and you had a big swelling on your neck, and I didn't know what it is, I would be doing you a disservice by saying, oh, what you have is a run-of-the-mill goiter. So what I'm trying to say is, and I'm going on way too long about it, is there are times when I'm not sure, and I would rather tell you I'm not sure than to wax on with some big long explanation that ends up being just totally blown out of the water at some point down the road. But as I look at this chart, and we're looking at this top line and this bottom line, you can clearly see that the S&P has been geared more towards this bottom line over the past year than it has testing this top line. So this tells me, to my eyes, that we may be getting near a top, and without really necessarily even having the signs of it yet being a top. If we look back on a monthly chart, you'll see this red line. I'm going to scale this in just a little bit. You'll see, for all practical purposes, we are quite near this line, even though that line is 128 points above today's close, plus a little bit. This line actually would be hit right now right around 1600, maybe a little bit higher. But you can clearly see that instead of us just powering on up to it, it looks almost as if we're starting to sag a little bit, if you will, to the right. side of this ascending channel. If we look at a daily chart, you can see that the highs of last April were roughly 1421, 1422. Here we are, 8 months later, 9 months later. Actually, that was very early April, and we're a grand total of 50 points higher than we were at the end of March, beginning of April last year. So what I'm saying is, it's not as if the S&P is just going to town, but it is being very stubborn and somewhat obstinate about wanting to go higher. But it's not doing so in any kind of big bull rush. Matter of fact, if we look at a 2-day chart, you can see that we don't quite get the low back in March of 09, but you can see this huge move over the course of a year from 666 to over 1200 in about a year. Okay, then we come back down. Then we take another almost 3/4 of a year to make a nice move off of the low thousands up to the mid 1300s. Then we take about 6 months to go from the low to mid 1100s up to over 1400. But now these moves are just starting to just shrink in size and to shrink in duration. And that leads me back to the idea that as you sometimes, what we've seen wedges, where as you get further and further out into the wedge, the time gets compressed. The degree of the moves, the percent of the moves gets compressed. So it just looks to me like a lot of the energy that we've seen over the past 4 years, or call it three and 3/4 years, a lot of that energy that we've been used to seeing in the markets is now just, it looks like it's just kind of winding down. So what happened today? Well, today we ended up, let's go to that 10-minute chart. This little pattern that we saw form yesterday, indeed, this time did not fool us. It did play out as a bull flag. Actually gapped up out of that, came back, didn't do a full back test, but came back to roughly what I would, maybe you'd call that just about gap support. Yeah, that's close enough. And again, what's gap support? Well, that's when the people who went to bed last night, having sold yesterday, wake up to this nice big move up to 1468, 1469 and change, and they go, dang, I didn't think the markets were going to do that. So they lay in wait, and once the market comes back to close to where they were sellers yesterday, they become buyers today. So that's why you get gap support. That's also why you get gap resistance. Just put it in reverse order. So what I'm looking at right now is we made a close over 1470, not hugely technically significant, and as a matter of fact, it's got to be more than that for me to say that's a breakout over that area. And additionally, if we back off here just a little bit, you can see we're very, very close to that 2012 high that was set last October. So looking at the 5-minute chart again, we had this trend line back here that we were in a channel for a while. Right here, we broke down through that. I would expect this line, if the market decides just to plow on ahead, I would expect that to be some resistance. Additionally, we had been looking at a channel here where this is the top resistance line. It got a little squirrely there as I went into the hour. Here it is in better form. There's that top resistance line. Who knows? Maybe this market's going to head on up to the 1480s. Find that line, then maybe sell back a bit. But one thing's for sure. We're not getting that nice, at least not yet, we're not getting that nice, neat looking inverted head and shoulders pattern that I was hoping for. Could we end up with it? Yeah, we could, but we would have to come back down pretty swiftly and test the 1440s at least and stay between these two levels for a little while. And it looks to me, guys, like we saw back here in this smaller inverse head and shoulders. Again, left shoulder, head, almost nothing of a right shoulder. Then it looks like we had an even larger one. Left shoulder, head, not much of a right shoulder. Got over it momentarily, then came back down pretty hard. But I say pretty hard, but when you go back out to the 3-day chart, you can go pretty hard. No, not really, because you can see again all of the timing and all of the moves look to be getting compressed at this point. So for today, I'm just kind of throwing up my hands, saying, caught me a little bit off guard here. I thought after this big gap up on January, the first trading day of the year, that surely we would see some kind of retracement of that big move up. But right now, it looks like the market just doesn't feel like doing that. Finally, I got one more trend line to show you, and let's go to a daily chart for it. If we draw a line, go back to October of 2011. This was at that panic bottom on October 3rd, 2011. And then we also go back to the lows of that really set up late May, early June of 2012. Extend that line up. You can see that back in this fall, let me zoom in a little bit. You can see back this fall, the S&P wanted to bounce on that line for a couple weeks. Or maybe not, about a week and a half. Then it finally broke. And you see when it did break, it broke pretty decisively. And we have been under that line ever since. We had one back test right here. And we may be setting up a second back test of that line. So if you want to maybe just have something to look at to see what might happen next, if you want to draw a line in the sand, if it were, maybe keep this line extended right here. But the way this line broke, and now we're headed up to even higher than we were here. And keep in mind, back tests often result in moves that are either higher or lower than where the breakout occurred. We could be heading up to back test this line or test this line up here, but we'd have to get over that dark blue line that I just pointed out. And that is the line over those October 3rd and June lows that got back tested on the 7th. Maybe we'll get back tested again. But guys, I'm sort of a little bit perplexed here. And I don't want to make any bold proclamations or anything like that. By the way, let's keep this line right here, just in case we end up forming a little topping pattern here while we're near the top of this larger channel. So guys, that is the video for today. Yesterday's little bull flag did what it was supposed to do, but once again, the market surprised me with some of this strength. So my spot to go long has not yet materialized. I'm hoping it does. Maybe I'm boxing myself into an intellectual corner to where things have to be just right. But you know something? I'm not going to chase this move. So You do what you want to do. Me personally, I'm not going to chase it. By the way, I'm about 30% long right now. The rest is in cash. So I'm enjoying these nice days, but I really want to get a good, solid pullback and a good reversal, and hopefully this pattern can still form something that gives us a nice tradable breakout. So look, guys, thanks for watching. Take care.